few days ago, I did a video on Nvidia, and more importantly, I took a closer look at this article where AOSL is the new GB200 supplier, leading beneficiaries of Nvidia's process certification changes. So many were wondering, who is AOSL? Is this a company we should invest in? Well, in today's episode, I want to take a closer look at the semiconductor company, just take a closer look at what they do and what exactly they're going to be doing for Nvidia. The reason this stock got so much attention was because the market cap of this company is roughly $1 billion. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
All right, so let's start off with just quick price action. And throughout this episode, we're going to try to understand what they do, how do they do it. I'll take a closer look at financial numbers and the most recent look at their recent earnings, which share a lot of insight of what they provide for Nvidia and maybe the AI space. But year to date, we can see that this stock is up roughly 35%. Most AI semiconductor companies are up a lot more than this. So maybe some investors might be saying, hey, look, is this undiscovered at the moment? But if we take a closer look from its year-to-date low, the stock is up nearly 88%. In the past year, the stock is up roughly 15%. So the reason we started to look about this company is there was an article that came out a few days ago where AOSL is a new GB200 supplier, leading beneficiaries of Nvidia's process certification changes. So AOSL is currently a supplier of MOSFETs and power ICs for Nvidia's HGX, DGX H100 AI servers, and now expected to become a new GB200 supplier. Most of you guys know that I'm super bullish in Nvidia, and I'm very bullish about their H100 and their H200 platform and all that. But the product that I'm super bullish about is their Grace Blackwell, or just their Blackwell architecture. So for them to have this certification and kind of this alignment with Nvidia for that new chip system, I think can be very beneficial, because we do know that that market is going to be very big for Nvidia. So if Nvidia wins, in theory, it means companies like Alpha and Omega can win as well. But let's learn a little bit more about the company so we can try to decide that at the end of this episode. So first, let's pull up their 10K report, and this is your annual report where they can give us more of an overview of what the company does. So AOSL, pretty much to bring it on a top level overview, is a semiconductor company that mainly focuses in analog chips. Very similar to maybe your companies like Texas Instrument or your Analog Devices. Right now, they have approximately 2,600 products. So we can see they have a lot of products on their catalogs. And they mentioned that in just 2023, they introduced about 60 new products. In 2022, about 130. In 2021, about 160 new products. Very similar to some of those other analog semiconductor companies that I mentioned, they do have kind of their own internal manufacturing, which helps kind of accelerate their technology development, their manufacturing product, and help with the overall supply chain as well. And here, if we take a closer look at their most recent presentation, they kind of talk about, hey, look, they have their in-house fab plant in Oregon. They have their assembly and testing in Shanghai. They have a fab, and they have kind of a joint venture as well here for fab and assembly and testing, and they also work with third-party foundries and subcontractors to do a little bit of everything, right? So we understand what they do kind of and how they do it.
Before we go any further, we are now on the road to 50,000 subscribers by the end of the year. Thank you all for the crazy support. So if you haven't and are enjoying the content, make sure to hit the thumbs up and the subscribe button. Finally, if you want to support the channel a little bit more, make sure to check out my special offer at fool.com/Jose. Now back to today's episode.
They, like I mentioned, they focus more in analog semiconductors, and analog semiconductors are chips that pretty much go on everything. What they really focus on, though, within the analog space is what is called power semiconductors. And these power semiconductors are what help drive the right amount of voltage, the right amount of energy to a product. And they have a really great picture here where they kind of show us, hey, look, the amount of controlling voltage needs to be different depending on the type of product and technology. For example, a low voltage voltage power solution can be used for kind of your consumer electronics like laptops, like phones. Now we can kind of see within the space of low voltage and mid voltage, you have things like GPUs. Now in mid voltage, you have other things like maybe power tools, you have scooters, you even have AI servers. So right off the bat, we can already kind of guess where their chips are, where their solutions are being used. They're being used in GPUs, they're being used in AI servers. Then they have high voltage solutions, which are used in things like cooling systems and like washers and like freezers and like big items in automotive, in solar technology as well. So one can see right now that there's definitely some growth opportunities for AOSL, as we saw those AI servers, we saw those GPUs. But if you're bullish in the semiconductor content in vehicles, in solar energy, this is another way that this company can benefit as well. And here they even mentioned a little bit more about their products. They mentioned how data centers and servers are kind of in need for continuous demand for energy conservation through high efficient products, which drive a market for their medium voltage, which is 440 volts to 400 volts, and high voltage products. Now their strategic customers are also some that maybe investors are excited about. We can see customers like AMD, like Dell Technologies, HP, Intel, Microsoft, Nvidia, Supermicro. So obviously, if you are being used for the production of GB200, you're most likely going to be used in a lot of the AI server solutions as well. So any kind of company that builds AI servers like Dell, like HP, like Supermicro are also gonna need your services. So if you are bullish right now in the GPU market, not just in the data center space, but in the consumer space, then obviously we can see the growth opportunity here. Next, we want to take a closer look at revenue growth. So we can see the company does expect by calendar year of 2026, 2027, that their revenue will grow to roughly $1 billion. Right now, I believe it's in around the 600 points. This company has definitely seen a bit of a slowdown here in calendar year of 2023 and calendar year of 2024, but they believe by 2026, 2027, it could reach $1 billion. Now, that's pretty interesting, right? Because the market cap of this company is $1.1 billion. So a price to sales ratio within the next few years of 1 is one that I can see why certain investors might get excited about. Now, when they talk about growth areas, the two top growth areas that I get pretty excited about are computing and power supply. Obviously, power supply is something that we keep hearing about right now in the data center market, and obviously with computing, with AI servers and all those AI solutions, and the GPU market as well. But another one that I didn't circle here is the automotive market that I believe is also another great growth opportunity. Now, as their most recent earnings, which I believe was a few months ago, computing, which is notebook PC, graphics cards, servers, and AI made up 48% of this company's total revenue. So if you are bullish in any of those markets and believe they can grow from here, that would become a bigger portion of this company's total revenue. And if, again, I personally am super bullish in servers, in AI, graphics cards, not just for the consumer market, but obviously the data center market. But in the consumer side, we are kind of getting out of this inventory slump in the PC market, and we have that AI PC race right now, which can also be a nice added drive of growth for their computing market, which is nearly 50% of this company's total revenue. All right, so now I think we learned a lot about what the company does, right? It's just so many products that there's no point really looking at one product. We just know that their analog power solutions are used for a lot of these growth driving technologies that we have right now. Now, if we look at PE ratio forward, which is the end of this fiscal year, and this fiscal year ends in about a month from now, we saw that they just recently reported quarter 3. So quarter 4 will be the end of this fiscal year. So this is a PE ratio of 61. So that kind of looks pretty expensive, and that might throw away some people. But let me explain a little bit more of maybe why you shouldn't just throw it out right now. Now, forward 1 year, which is next fiscal year, so it's about 13, 14 months from now, is 53. That's still pretty high in my opinion. Now, earnings per share estimates for 2 fiscal years ahead is about $1.50. Now, if we look at the current price of AOSL, and that is a price of $37, and we know PE ratio is price divided by earning. So let's do 37 divided by 1.5. So that's going to give us a PE ratio of roughly 25. Now, I'm going to guess that most analysts are pretty conservative for this, especially if they're not really looking at Alpha Omega growing too much in the AI server market. But if they have the potential to grow here, then these numbers might actually be pretty weak. So that PE ratio might be a lot lower than 25. So maybe some investors might get excited about that potential growth. Now, let's take a closer look at their overall balance sheet. We can see cash and short-term investments of $175 million. That's about 17% of their current market cap right now, so not horrible. Total long-term debt of about $41 million, so they have plenty of cash to cover all that debt. Free cash flow in the most recent quarter was positive. Cash flow from operations in the most recent quarter was also positive. And now this is that I believe this market is going to start to see a nice uptrend again, and we should see an improvement of all those metrics within the upcoming quarters. Now, revenue estimates, we can see that this company is expected to jump its revenue through the upcoming years. But remember, they mentioned that by 2026, 2027, they can reach about $1 billion in revenue. Now, analysts right now are only projecting 2 years ahead from now about 764 million. So in my opinion, this is why I believe analysts are underestimating the growth potential, the earnings per share potential of this company, and those PE ratios that we just look at can actually be a lot smaller in the future. Now, another thing that we should know is their CEO, which is Mike Chang, currently owns 14% of the overall business, which is a pretty high number for a public company. While the CEO has been selling shares and throughout the past months and so, he still has a huge percentage, and it is the number one shareholder of the company. Now, the final thing I want to take a closer look at is this company's most recent earnings call, which happened on May 7th for their quarter 3 of 2024. And after this, I want to take a closer look at my overall thoughts on the company and would I buy, would I hold on this company, how would I play it? So he does mention, Stephen Chang, which is the CEO, that during the March quarter, they saw an increase in demand for newer applications such as graphics cards and AI applications. Starting from the June quarter, we forecast a rebound in gaming and continued strength for tablets, graphics cards, and AI. So right now, he's already telling us that, hey, look, the AI market is definitely pretty strong for them, and that's newer applications for them. The second thing he mentions is looking forward into the June quarter, they expect computing segment to grow mid to upper single digits on continued strength in tablets, AI accelerators, and graphics cards. I'm going to guess that he's being a little bit conservative here as well because he doesn't know where they're going to go from here. But if they are going to go in the GB200 in the upcoming years, I do believe the year-over-year growth here in their computing segment, which was over nearly 50% of this company's total revenue, can grow at a faster rate. Now, if we kind of keep scrolling down, some other things I have highlighted is that they're starting to get some business because of their success in graphics cards. One of their customers is basically using similar solutions on their AI accelerators. I'm going to guess that this is either AMD or Nvidia, which are probably the only two players, maybe Intel too. But I'm going to guess this is more Nvidia of anybody, where they are doing really good in the graphics card market. And that's why they're kind of moving into the AI accelerators, because it's pretty much kind of the same product one way or another. So this gets me pretty excited for the AOSL, like an AOSL company, as there is this opportunity here in the AI market. So now that I provided all the evidence that I have for their AI accelerator market and how they can benefit and provide solutions for Nvidia, I want to just share my overall thoughts on would I buy or would I sell. This is one of those companies that by any means, I would not make it a size of a big portfolio. This is what I would call a growth opportunity play, right? Where Nvidia is a growth, but also a monster. The main reason is Alpha Omega obviously has this partnership with Nvidia, but the types of solutions that they have there's not true moats to it. While there might be some technology difference, there is it's not impossible for competitors to take the market from them. So AOSL doesn't have kind of like that moat play, in my opinion. The play that it does have is, in my opinion, very similar to Supermicro, where Supermicro doesn't have necessarily too much of a moat, while it does have a moat in liquid cooling and other things. Their biggest reason to be bullish is this is a small company that, with the huge growth of AI, the revenue can skyrocket pretty high, especially if AI accelerators and GPUs already make up a good portion of this company's total revenue, so they can see that growth accelerate even faster. So this is more of a growth play that if I was to ever invest, maybe like 2 to 3% of my overall portfolio at max, but I definitely see the opportunity to play this. Now, at current levels of $37.16, this is more where I would start. Let's say I was to do a full position. Right now would be a time where I would do maybe a quarter position to enter, and then dollar cost average my way in, because obviously this company deals in other markets as well, and we can see the overall volatility. There might be better opportunities, especially since the stock has run up nearly 23% since just a few weeks ago, right? In this past month, the stock is up nearly 25%. So with that volatility of going up one way, we can see that same volatility go down. But there's definitely opportunity here. I'm not going to say this is my number one semiconductor company, but if anybody wants to take a closer look at a company that has the potential to grow, maybe kind of an outlier in the AI space that many people might not be discussing, Alpha Omega might be the play for you. So like I mentioned, right, for me, not necessarily a company that's going to go bankrupt. With the $1 billion market cap, highly volatile. If I was to open a position, it would be a small position. I would never make this more than 3% of my overall portfolio, or maybe even 2% of my overall portfolio. But if it is a winner, I can definitely see this 2xing or 3xing because of the growth of AI. So let me know your thoughts below. Let me know if you guys enjoyed today's episode. I know it wasn't necessarily an Nvidia episode, but I do believe it correlates with the growth opportunities that we see with Nvidia. If you want to see more companies like this, let me know in the comments below. Take care, have a good day, and see you all next time.